Ultimate Gold Investing Guide 2025, Part 2 of 2, How to Buy Gold in the UK Step by Step. If you haven't seen Part 1 yet, I strongly recommend going back and watching it. We cover the foundations, what gold is, how to buy it, the safest ways to start, and the key tax rules every beginner should know. You'll find the link to Part 1 in the description below. Gold versus real estate. Which is better for beginners? Both gold and property are seen as safe, long-term investments, but they serve different roles, especially for beginners. Gold offers a much lower starting cost. You can begin with as little as £50, while property often requires £20,000 or more, just for a deposit, not to mention legal fees and stamp duty. Gold is simple and low maintenance. It doesn't need repairs or tenant management. There's no council tax, just small storage or insurance costs if you're holding physical gold. Property, on the other hand, involves ongoing expenses, maintenance, taxes, insurance, and the possibility of tenants moving out unexpectedly. When it comes to liquidity, or how quickly you can access your money, gold wins again. It can often be sold within hours or days. Property sales can drag on for weeks or even months, depending on market conditions. Returns are where things diverge. Property can generate monthly income through rent and appreciates over time. Gold doesn't pay income, but it tends to perform well during inflation, economic crises, or currency devaluation. So its value lies in protection. If you need flexibility, a low barrier to entry, and peace of mind during uncertain times, gold may be the smarter starting point. If you can afford the upfront costs and take on more responsibility, property can offer powerful long-term growth and cash flow. For most beginners, gold offers a more accessible and lower-risk way to start preserving wealth, especially when home ownership feels out of reach. Gold versus cryptocurrency, digital gold or hype. Let's talk about one of the biggest debates in investing today, gold versus crypto. Some call Bitcoin digital gold, but how true is that comparison? Gold is stable, it's been trusted for centuries. During wars, recessions, and political upheaval, gold is the go-to safe haven. Crypto, in contrast, is new, fast-moving, and full of potential, but also risk. Prices can swing 20% to 50% in just a day. Gold might move 5% to 10% over weeks or months. Gold is globally recognized and easy to value. It's not tied to the performance of any government or tech platform. Crypto is still being regulated, banned in some places, embraced in others. It's evolving fast. Ownership is also different. Gold is tangible. You can store it at home, in a vault, or even wear it. Crypto exists only digitally. You need to understand wallets, keys, and security, or risk losing access. So what's the bottom line? Crypto is speculative. It may deliver high returns, but comes with big risks. Gold is proven, steady, and especially strong when preserving wealth. Savvy investors often use both. Gold as a reliable core, crypto as a high-risk, high-reward satellite. Using gold in retirement planning, gold can play a smart role in your retirement, not to grow your wealth aggressively, but to help you protect it. As you get older, your financial priorities shift. You don't want to take unnecessary risks, you want stability. Gold offers that. When markets drop or currencies lose value, gold tends to hold firm. Most pensions are tied up in the stock market. That's fine for growth, but it leaves you exposed. Gold gives balance. It adds a layer of protection to your retirement strategy. You can hold physical gold coins or bars stored securely. That gives peace of mind. Or, for convenience, you can invest in gold through ETFs held inside a pension wrapper, like a SIPP or ISA. But remember, gold doesn't generate income. So in retirement, pair it with dividend-paying stocks, rental property, or bonds to ensure you've got a steady cash flow. The golden rule? Don't go all in. Gold is a hedge, not a complete solution. Most experts recommend holding 5 to 15% of your retirement assets in gold. The rest should be diversified. Gold is for protection, not income. And in retirement, protection is priceless. How to sell gold, exit strategies, and AMP. Tips. Buying gold is one step. Selling it wisely is another. Whether you're cashing out gains, covering expenses, or moving into new assets, here's how to do it right. First, consider selling back to a dealer. Most reputable dealers will buy back the coins or bars they sold to you, often at a small discount to market price. It's simple, fast, and trusted. Another option is selling privately. You can use online platforms like eBay or meet buyers in person. If you go this route, be cautious. Verify buyers, meet in public or secure locations, and know your pricing. Private sales might get you more money, but carry more risk. For those using storage services, some platforms let you sell gold directly from your vault. Bullion Vault or the Royal Mint offer this. It's convenient and usually priced at live market rates. Just watch out for service fees. When selling, think about taxes. If you're offloading large amounts, you might be liable for capital gains tax. But there's good news. Selling UK legal tender coins like Britannia's or Sovereigns is usually CGT free. Always keep records: when you bought, what you paid, who you sold to, and how much you received. Receipts and dealer confirmations are key. Smart exits start with smart tracking. Final words: building a gold mindset. Gold isn't about hype, it's about preparation. It's a quiet confidence, knowing you're ready if the world shifts. Prepared for inflation, prepared for currency collapse, prepared for economic storms. For beginners, gold offers a way to start small, learn safely, and build something real. It gives you a foothold in investing without needing thousands of pounds or years of experience. You don't need to buy kilos of gold to make a difference. A few grams, held wisely, can mark the beginning of a more resilient financial future. You just need clarity, commitment, and consistency. If this video helped you, please subscribe to Everstead. We bring you timeless strategies, always explained simply, always focused on your future. And if you haven't seen part 1 yet, now's the time. It covers the essential foundations, from what gold is, to how to buy it, how to store it, and which tax rules apply. The link to part 1 is in the description below. Precious metals are high-risk investments. You could lose all the money you invest. They are not regulated in the UK and offer no consumer protection. This content from Everstead is for educational purposes only and does not constitute financial advice. Always do your own research and consider speaking to a qualified financial advisor.